Okay, I think we could go ahead and get started. Good afternoon and welcome to our Office of Economic Development Virtual Business Information Session. My name is Margaret McGee and I'm the Business Services Manager. Today we welcome Juan Nathan. He's the Business Development Officer with TruFund Financial Services, and Catherine Furlow. Did I pronounce your last name right?
Freelo, we say a little
Freelo.
O, yes.
Okay. All right, and she's the Business Development Officer with LISC, Louisiana. Both are CDFIs. If for those that don't know what that is, it's Community Development Financial Institutions here in New Orleans. Our today's topics will be the Southern Opportunity and Resilience Fund, also known as SOAR, and Invest NOLA COVID Relief Fund, and other lending opportunities. Mr. Luke Mars with the Louisiana Department of Revenue will join us a little later at 2:30, and he'll give us an overview of the COVID relief for small businesses and nonprofits, which was recently released. Unfortunately, a representative from LISC, Small Business Relief Grant, was unable to join us today. Please make note of all questions, hold them to the end when we have question and answers. Make sure we give our presenters enough time to both present their presentations. So now I'll go ahead and turn it over to Juan Nathan.
Good afternoon, everyone. Created a PowerPoint slide I'm going to share. Share screen. There we go. Can everyone see my screen?
Yes.
All right, thanks so much. Well, good afternoon, everyone. My name is Juan Nathan. I'm a Business Development Officer with TruFund Financial Services. As Margaret alluded to, we're a CDFI, which stands for Community Development Financial Institution. And it's me, Juan Nathan. My motto is, as a Business Development Officer with TruFund Financial Services, I'm passionate about helping business owners find creative ways to access capital for their businesses. I accomplish this by taking a value-added approach where I take the time to understand how each business operates so I can generate a recommendation that will put each business in a position to become successful. A little bit about me. I've been working in financial services for 10 years. It seems like a long time. I've been with TruFund for 6 months, but I tell people it seems like I've been here 6 years because working for a smaller company, you get fully integrated much sooner. So day one, I just kind of jump right in and become a part of the team, and I'm really enjoying the work that I'm doing within the community. And that's actually what drew me to TruFund. When I was thinking about where I wanted my career to go, I wanted my next position to be one where I was able to help communities and help entrepreneurs such as you all. So this is, in essence, my dream job that I've been waiting on. My experience is working with big banks. So I've worked for Capital One, Wells Fargo, and most recently Chase Bank. I consider myself a community development champion because we're always looking for ways to invest in our communities. I also try to be a positive thought leader. So I'm a glass half full type of person. And also I consider myself to be a progressive thinker because, you know, we have to get creative sometimes whenever we're working with our clients. So I'm always looking for ways and to think outside of the box, and also collaborate with partners to find ways to think outside of the box to help businesses like yours. TruFund's mission is to help historically disadvantaged individuals and communities create thriving and resilient small businesses and entrepreneurial ecosystems in order to close racial and economic disparities and ensure an inclusive and equitable society. So our mission is community driven. Whenever we look at a loan inquiry, one of the biggest boxes that I have to check is that what impact is this loan going to have not only on this business, but on the community? because we have to lend to businesses that are going to have an immediate impact on the community, such as, hiring minorities as employees, hiring minority contractors, giving back through community development in some kind of way. So impact, we're an impact-driven company. So whenever we're discussing a loan inquiry, we're talking about how is it going to impact the community that you serve. A few fun facts about TruFund. We actually provided disaster recovery loans to businesses affected by the 9/11 terrorist attacks. I said we're a CDFI. We talked about what that is. We're actually certified by the U.S. Treasury, which means one of two things. We don't report to the FDIC, and we're not a depository. We don't have money markets, checking accounts, savings accounts, CDs, and we don't have to follow FDIC lending guidelines. So we're a lot more flexible with how we can lend money and who we can lend money to. We're a mission-based organization. In addition to being a mission-based organization, we do revenue-based lending, which means that we take a look at the full financial picture for the business to make sure that we're putting them in the best position to succeed, and to make sure that we make prudent decisions on behalf of our clients. And we also look to build long-term relationships with clients. So how do we support our mission? Through access to capital. So TruFund offers a variety of traditional small business loans for working capital, inventory, equipment expansion, and other business needs as well. So now we're going to jump into a few loan products that we offer. First, we're going to talk about SOAR, which is the Southern Opportunity and Resiliency Fund. So we have a lot of businesses that were affected by COVID-19, which means that they had a really good 2019, and then COVID came around in March 2020, and then things fell off. So with this particular loan fund, we're able to look at revenues and income from 2019 in order to qualify businesses for this type of loan. The businesses that qualify for SOAR are businesses that have fewer than 50 employees, have annual revenues of less than 5 million, can attest to experiencing direct economic disruption due to COVID-19. So if your business was affected due to COVID-19, we need to know more about that and how it was affected. We work with businesses that have been established since September of 2019, and the loan amounts are up to $100,000. So the loan amounts is a calculation. What we do is we average your revenue. So we take your annual revenue divided by 12 and then multiply that by 3. So the loan amount is up to 3 months of your average revenue. And the loan is amortized over the course of 5 years with principal and interest payments. This is actually a really good interest rate that this loan offers. Is 4.5%. Most of our traditional lending products range between 7 and 10. So actually SOAR is a lot less expensive than our traditional loans. And then the debt service is 1.25, which means that for every dollar that you're borrowing, your business has to earn in income $1.25. And the formula that we use to figure out debt service is we figure out the annual loan payments, and we divide that into your net operating income. If that multiple is at least 1.25, then that means your business can afford the debt. We also factor in any other business debt as well. So we not only factor in the debt that you will incur from this loan, but any other annual business debt that you currently have. And clients can qualify with this loan with a FICO score of 600. When I'm done with my presentation, I'm going to copy and paste this link into the chat, because that's where you actually go to apply for the SOAR loan through the Connect to Capital website. And it'll have different CDFI options. So if you want to go through TruFund, you will select TruFund. If you want to choose LISC, you will select LISC. Or if you want to go through Nucor, select Nucor. And then that loan will be routed to the respective company that you choose. So that's the SOAR. Now I'm going to briefly talk about a few other loan products that we offer as well. This one is the Wisdom Fund. It provides capital to women-owned businesses. We can work with businesses that are newer, that have at least 1 year of financials. The loan amounts range from $50,000 to $750,000, and the term is amortized up to 5 years, principal and interest payments. With this loan, we can be a little bit flexible, so we can build in an interest-only period as well. to kind of help the owner as well with the payments. The interest rate ranges from 8% to 10% on this particular product, and the debt service we're looking for is 1.1, and then the FICO is 600. We also have a suite of products called the Entrepreneurs of Color Fund. Within the Entrepreneurs of Color Fund, we have 3 loans that are available. The first one is a microloan. It's a working capital loan. We can work with businesses that are at least a year old with loan amounts up to $50,000. We can actually amortize the payments over 7 years at an interest rate of 9%. The debt service is 1.25 and the minimum FICO is 600. The next one is the Entrepreneurs of Color Fund business loan. This is a larger loan for businesses that have at least 2 years of financials. This loan can be used for working capital, equipment, or leasehold improvements. The loan amounts range from $50,000 to $250,000. So with this particular loan, we can amortize the payments over 10 years. However, it's a 7-year note. So when we figure out the loan payments, that means we can stretch it out. We can give you a cheaper loan payments because we can amortize it over 10 years. However, the term is 7 years, which means at the end of the term, you'll have a balloon payment. We can also fully amortize the payments over 7 years as well, whichever you prefer. So if you want a cheaper payment up front, and then we'll be willing to pay a balloon payment to close out the loan at the end of the term, we can do that. Or if you just say, hey, 7 years, I want to be done, we can amortize it over 7 years as well. And that interest rate is 7.75%. And we're looking for a 1.25 debt service with that one as well, with a minimum FICO of 600. And then the last one for the Entrepreneurs of Color Fund is a commercial real estate loan. This is actually a pretty cool loan because we offer high leverage with this particular loan. So this particular loan is for businesses that want to purchase commercial real estate. The business has to occupy at least 50% of the commercial space in order to qualify, and has to have at least 4 years of financials. We can do loan amounts up to $5 million. And this one, we amortize the payments over 25 years, and the note term is 5 to 7. So, which means that at the end of the 5 to 7 year note term, you have 3 options. You can pay a balloon payment to pay the loan off. You can refinance it at a lower rate with a different financial institution, or you can refinance it with TruFund and we can extend the note another 5 to 7 years. The interest rate for this particular product is 6.75%, and the debt service is 1.25 with a minimum FICO of 650. With this particular loan, it's highly leveraged. So we're offering 90% loan to value. So the down payment is 10%. So I know traditional lending, commercial real estate loans, they're not as leveraged as this particular fund. Some companies do, 80% loan to value or 70% loan to value. So what we're doing with this one is we're offering a lower down payment. And the goal with this product is to get commercial real estate in the hands of more minority-owned businesses and business owners. So now I'm just going to talk about the approval process and how that works. So whenever I receive a loan inquiry, the first thing I do is I send out a pre-application questionnaire, which has a list of questions that I will ask you to answer. The biggest thing with this one is either providing the gross revenue and net operating income for the last 2 years of your business, or providing the last 2 year tax returns. So once I have all of that information, I can actually pre-underwrite the loan to make sure that the business can service the debt. Once we've determined that it's a good loan and that the business can service the debt, then I meet with my manager, who's the director of lending, Robert Benitez, and we discuss the loan in detail. We discuss loan programs, and we make a recommendation on which loan program we'll offer you at that time. Once we've made that determination, we'll come back and discuss the specific loan program. We'll discuss fees and closing costs, and also terms and payments. At that time, if you accept, if you're willing to move forward, then we will request a full loan packet, which is a list of documents that I'll send out that you'll have to send back to me. Once I receive the full packet, I submit it to underwriting. Our underwriting process is very fluid. So like I said, we're a smaller company. So I work directly with the underwriter to make sure that we have any questions that he has answered. So it's an ongoing conversation. once you submit the loan packet, we may have to have more dialogue about the loan and about your business. So it's always good just to have an open mind because certain questions come up that we may not initially answer. Once the underwriter approves it, approves the loan, we submit it to our executive management team, who gives us the final approval. And then we go to closing and disperse the funds. So it's pretty fluid, pretty efficient. It does take about 2 to 4 weeks to go through the whole process. The biggest time, the item that takes up the most time is just submitting the loan packet. So a lot of times, business owners may not have information handy. They may have to get with accountants. But so the sooner we get the loan packet in, the sooner we can get it submitted and get a decision. And that's it. You have any questions? All right. Well, I'm gonna if there are no questions, what I'll do is I'll hand it back over to Margaret, and I'll actually copy and paste the link to how you can apply for the SOAR loan into the chat as well.
Thank you. Thank you, Juan. I'm actually looking here for Catherine.
Catherine's right here.
Okay, there we go. So we'll go ahead and turn it over to Catherine.
Okay. Margaret, did you want to do the PowerPoint or shall I go ahead and do it? Okay, I guess I'll go ahead and share.
I'm sorry, I had put mine on mute. Whatever is convenient for you. I do have you as co-host, so you can share your screen.
Oh, okay, great. So I'll go ahead and share my screen. And let me see if I can get in here. Well, for some reason it's not, I can't seem to get in. So Margaret, do you mind doing that for me?
Yeah, I'll get it.
Okay, great. Thanks.
Let's see here.
All right. Well, good afternoon, everyone. My name is Catherine Freelow. I'm the Business Development Officer for LISC Fund for Louisiana, Arkansas, and Mississippi. LISC Fund is also a CDFI, Certified Development Financial Institution. We've been in business for about 27 years. I'm just going to keep talking about us until Margaret gets my PowerPoint up. But we've got quite a bit of funding that we are doing right now here in Louisiana. And one of the things that I do want to share with you is I have been with LISC Fund for 2 years this September. My former background is 25 years large lending, SBA lending with Wells Fargo. So I'm originally a San Antonio, Texas girl. However, my husband is from New Orleans and we moved back here a couple of years ago to be closer to his family. So LISC Fund, about LISC Fund, the next slide, please, Margaret. So we did start in 1994. We were originally, the name was Axion, and I'm sure some of you all have heard that name, Axion Lending. And what happened really was we got very large in our lending process and things that we were doing. And so we ended up moving our name over to LISC Fund. We still have the same CEO, Janie Barreras, who's a former nun, and our company is located out of San Antonio. I need to be on slide 2, Margaret, if it's possible.
Is that the one?
No, ma'am. The next one, please. And you probably could just go ahead and skip down to slide 3 because I think I've pretty much talked about this. So we have lent probably to over 30,000 entrepreneurs in the time that we have been in business. And just to give you an idea of what we were doing last year, we cover the states of from New Mexico, Oklahoma, Texas in San Antonio being where our hub is, Louisiana, Arkansas, Mississippi, Alabama, Florida, Georgia, Kentucky, South Carolina, Missouri. And so we've got 13 states in our group. And Margaret, are you having a hard time with this? Because we're only seeing the first slide.
Oh, that's all you see?
Yes, ma'am. Yes, ma'am. So
let me see. I'm working with 3 screens, and I guess it's confusing me a little bit.
Well, I tell you what, let me see if I can get in there and try to do it again. Hold on. Let me see if I can get in there. Stop sharing. Let me share. I'm sorry about the technical difficulty. We'll get this here in a second. All right, there we go. Can I get somebody to let me know if they can see the screen?
Yes.
Okay, great. So let me go here to view. See if we can see this better. So again, I wanted to talk a little bit about our success model that has made us very successful. In organizations like ours, which includes TruFund with Juan, we realize a lot of successes with clients. They have like a 74% success rate if they're going to a CDFI, and they keep going back to a CDFI overall. And with LISC, after 3 loans with LISC, entrepreneurs actually do see an increase of their take-home pay over 44%. And on average, we have a 96 repayment success rate. And for every $50,000 that we loan, it pretty much creates about 6 jobs in the community. And that's the biggest impact that we can have, is helping entrepreneurs and their employees find their own personal wealth to be able to do the things that they can do for their children and for their community. So,
Catherine,
yes, ma'am.
excuse me, I hate to interrupt you.
Mm-hmm.
We just got a message on the chat saying to activate the slideshow. If you go to slideshow, it'll make it bigger,
Okay,
make it easier, and then go from the beginning.
There we go. Thank you. There we go.
And from there, you can just hit the arrow. Yeah, there we go.
Okay. So we've got 4 products that, well, I should say we've got a lot of products, but really we work on small business lending, and we range from $500 to $500,000. We do loans for equipment, working capital, all kinds of improvement, businesses, inventory, marketing, and other needs. And we also are doing startups. So we're getting back to our original lending prior to COVID. So I am looking at startups. We do have some special funding here in Louisiana. Unfortunately, it's not for Orleans Parish, but it is for Jefferson Parish. But I've got EDA lending in Louisiana with some fixed financing and some great rates, and it's part of the COVID lending. The one thing that I'm going to talk about is we are one of the partners in Invest NOLA, and that is the COVID relief fund that we've put together with several other CDFIs, the city of NOLA, and I'm going to talk about that here in just in the next slide. besides our products, our lending products that we also have services. And one of the ways that we help get funding from the SBA and large banks, we get grants and stuff like that, is we provide technical assistance to our clients. So we provide technical assistance on financials, marketing strategies. We also include partners like the Small Business Development Center, the SBA, SCORE, EDA, and of course, local and regional national banks. In this technical assistance on our website, you will be able to find all kinds of resources, webinars, and things like that to help you. And some of it is about marketing and technical marketing, especially during COVID when we had a lot of digital things going on, and we've got seminars on that. And you can register online on our website. But I do want to talk about the Invest NOLA COVID Relief Fund. So the city of New Orleans has come out along with the CDFIs. We've committed $2 million to the Orleans Parish. And this is to support the sustainability, of the micro businesses that we have here in New Orleans. And we've got this consortium that we've put together to help fund these. So it will be TruFund, myself, and Nucor that'll be working on these particular businesses that need more funding and monetary aid. And a lot of these businesses we'll look at did not receive PPP lending prior because they did not have their financials put together, or they started in the first round of PPP, which they were taking the net income on Schedule C and not the gross income like they did in the second round. And people just get frustrated, or businesses, the owners just don't know what they don't know. And there was a lot of misinformation out there. So with this consortium, it was the brainchild to get this going to help these small businesses in New Orleans. So we've got the New Orleans Business Alliance that is part of this group. And of course, the city of New Orleans, TruFund, Nucor, and ourselves, LISC Fund. So this is what the funds will look like. You can request loans between $10,000 and $50,000. It is a 6% fixed rate. The loan terms will be 5.5 years. And the reason why they're 5.5 years is the first 6 months of payments will be deferred in order to help those businesses kind of get back on their feet. And then at the very end, if you've done everything that you were supposed to do and pay everything in a timely manner, there could be 10% of the principal balance that may be forgiven. So for example, if you do get a $50,000 loan and you have 6 months of deferment, and then you end up paying most of the principal and interest, you may only pay $45,000 because that 10% would be $5,000 that could be forgiven on this particular loan fund. And we're very excited about it. So the eligibility on this particular loan fund, there is eligibility. We've got small business owners and sole proprietors are part of this. Businesses must be located in Orleans Parish. The business must have been in operation by February 15th, 2020. And when I say in operation, we need to have either an EIN number from the IRS with a date before that, or if it's a small LLC, something like that. Or if you're sole proprietorship and you're doing a DBA, we need to see items that are going to show us that you actually were in business prior February 15th, 2020. And then here's the other caveat to really make this small business: annual receipts. So that means your gross sales must be less than $500,000 and no more than 10 employees. So this is really drilling down to these small business owners within Orleans Parish. So the way you learn to find out more is you can go to InvestNOLA COVID Relief Fund, and right there I've got this, and I will cut and paste this and put this in the chat. And then that also shows you where the application is. So you can apply there. Now, I do have a caveat. We're not ready up and running. The application is ready for you to apply, but the CDFIs are still waiting for some direction, which hopefully we'll have it tomorrow. So by Monday or Tuesday, we should start looking at these loan applications. So it is taking us a little time to get our consortium together and to get this done. We're using a third party to help us with the applications. And I'm sure with like SOAR, you can designate whether you want to go to LISC Fund, TruFund, New Core, one of those. But we're very, very excited, and this is a long time coming trying to get this funding. One of the things that I did want to share about LISC Fund last year, we're only 100 employees, and we did over $90 million in COVID relief and COVID funding, which included PPP last year alone. Of that 90 million, I had 2 million designated for New Orleans and the major statistical areas of New Orleans. And we did $2 million. I did $2 million, and the average loan size was about 17,000. So LISC Fund is very mission driven when it comes to helping minority small businesses. And I did want to visit a little bit about the EDA recovery loans that we do have. And although it's not for businesses in Orleans Parish, we do have businesses in Jefferson that can qualify. It's minority-owned businesses. It helps recreate and retain full jobs for women-owned businesses, and this assists in COVID recovery. And unfortunately, it is located in specific parishes, and I'm hoping to finish deploying these funds and then going back and knocking on the EDA's door saying, hey, I need all of Louisiana, which would include Orleans Parish. But these are the parishes. If you know of anyone that has businesses in these parishes, I'm really trying to market this and get this out there along with the InvestNOLA funds. So, and these loans are up to $137,000 with a 3.5 fixed rate and a 2% commitment fee. And these are recovery loans from COVID and can be used for equipment, machinery, commercial real estate, leasehold improvements, and up to 50% of it can be working capital. So we are, again, designated CDFIs, and really it's absolutely wonderful, the CDFIs here in New Orleans. I've known Juan for a couple of years, and we work well together, and if I can't do it, then I give it to him. If he can't do it, he'll give it to me. We work very well with New Core and TruFund with Juan, and then also Hope Community Credit Union. And so it's really great working with a lot of these CDIs. Again, my name is Catherine Freelow, and this is a post-2019 COVID picture, and you're looking at me after COVID. This is my information. Feel free to call me or to reach out to me via LISC Fund. But one of the things that we do have in LISC Fund, we've got what we call Level 5. If you are a community partner, you can get in there and be a partner with LISC Fund. If you've got clients and you want to see if they qualify for funding, you can get into an area on our website called Level 5. We ask questions about it, and then we tell you whether or not it would be a fit. But we do enjoy our community partners, whether they're CPAs, attorneys, if they're CEOs or CFOs working for a whole bunch of different companies. I've got one gentleman that is helping me. He helps a lot of companies. And so we kind of help him with his different clients, but we're a very big proponent of partners. And of course, with the city of New Orleans and the economic development is so important to all of us. But just get a chance and get on our website and take a tour of it. But in the meantime, if you have any questions, you're more than welcome to give me a call or email me, and I'll put that in the chat. And thank you so much, Margaret. I appreciate you asking me to be on today.
Thank you, and Juan, both. Are there any questions for Catherine or Juan at this time? Well, it seems like you guys did an exceptional job if there's no questions at this time. Unfortunately, Luke haven't joined us yet. He said he would join us at 2:30. So if you guys have, any other information that you want to share, you could do so. I did try to see if he could jump on a little early.
Well, I was wondering if anyone out there is interested in applying for loans. I think SOAR is a really great product. I'm not one of the folks working on SOAR for LISC Fund, but I know Juan is. And maybe Juan can tell us some of the kind of clients that you're seeing that are getting funding through SOAR.
Yeah, well, we actually have a pretty large client base through SOAR because a lot of businesses were affected by the COVID-19 pandemic. And businesses that are we have lots of businesses that are applying, and we're going through our regular lending process. We just had a business approved in Baton Rouge for a $15,000 loan. I actually have couple of loans in underwriting right now, and that product is exceptional because it offers that really low interest rate. So even clients that come to me for traditional lending products, the first thing that we do is we see if they qualify for SOAR. And if so, then we talk about that program and try to get a funnel through there. SOAR is also a very streamlined underwriting and quick closing. So typically, closing is really easy. It happens within 2 business days after getting the loan approved. But like I said, we work with our loan processor. So once I receive an inquiry and the client goes online to apply, then it gets assigned to a loan processor through TruFund. And then we both work together to make sure that we walk through the loan through each step of the lending stage. But it's a really good opportunity, especially for businesses that were affected by COVID. In addition to that, I'm also working on the Invest NOLA COVID Relief Fund as well, along with Catherine. So, and we're starting to see some movement in that portal. So the biggest thing is don't wait. If you need funding for your business, look into it. And on my presentation I had, we look to build long-term relationships with clients. What we mean by that is some businesses that we come across may not be capital ready. So TruFund, kind of similar to LISC Fund, we have our own technical assistance that we offer as well. So I always tell anyone that comes to me, even if we can't help now, it's not the end of our relationship, it's just the beginning, because we partner with different organizations to make sure we get you to the point where you are capital ready. And I do follow up with all of my inquiries. So even if the business isn't ready to apply for a loan just yet, we keep that relationship going and kind of walk them through it. So that way, whenever they get things to the point where they are capital ready, it's a swift process to get it going. So feel free to reach out to us, even if you feel like you may not be ready for a business loan. Let us know anyway, because you never know what'll happen. Businesses use capital to fund growth. And I know a lot of businesses will be growing as we get through this second strand of this COVID, hopefully within the next few months. But, businesses are going to be growing. And one of the biggest, I met with a client a couple of weeks ago that had a very, very successful business model, but they grew too fast. and they went from from having 6 stores that they were distributing to 150. And the business didn't make it because they didn't plan for growth accordingly. So all that to say, if your business is up and coming, your business is growing, start looking at lending options now. So that way, when you hit that growth curve, you'll have all of the resources in place to be able to handle the growth.
Thank you, Juan. And while we were talking about the CDFIs, I know you guys mentioned Nucor a couple of times. We actually have Ms. Vaughn, if she wants to come in and give us some information. Ms. Vaughn? Maybe she stepped away for a moment.
Maybe she doesn't realize she's on mute. Okay, well then, can I ask a question, Juan, about SOAR? When you said it was a streamlined process for the application, what kind of information are you guys, is the SOAR group asking for from clients? Is it bank statements? Is it tax returns? What do clients need to know to be prepared to give you that type of information? You're on mute.
For the application, it's a simple form online. But then once we route it, then we do the pre-screening, which means that we request 2 years tax returns. We request 3 months bank statements. We request a personal financial statement, and we request organizational documents. So if you're registered with the Secretary of State, your articles of organization. And also we request a copy of the driver's license front and back. Once we have all of that, we call it a full packet. Once we have a full packet, then our loan processors go in and do the pre-underwriting to make sure that the business can pre-qualify for the loan. Once they determine that the business pre-qualifies, then they send an application that you can fill out electronically through Adobe. And then you fill that out and send it back electronically, and it goes to underwriting. So we try to make it as streamlined as possible. So, once I identify that a client qualifies for SOAR, then, we get the loan processor involved because they're trained to process all of these applications through our database. But I'm still in the mix. I'm still in the middle as the relationship manager, making sure that that the loan processor can get in touch with the client. Perfect example. I had a client that applied a few months ago, and then he reached back out to me and said, hey, I hadn't heard anything back from the processor. So the processor had, wrong information on him. So I was able to coordinate a meeting to where they were able to get the documents in, and now that loan is in underwriting. So, we tag team to make sure that we're providing the service. But yeah, those items needed typically are the 2 years tax, at least 2 years tax returns. Also, we will need a statement on how COVID affected your business, personal financial statement, bank statements, organizational documents, and a license, but and the personal ID, which is a driver's license or state ID. So those are typically documents that we need.
And I'm sure there's going to be the same documents that the Invest NOLA Fund is going to be looking at. And so Juan and I will be looking at that. So if you are a small business owner, I strongly suggest that if you haven't done gotten your tax returns, you may want to go ahead and do that, but also think about that statement about how COVID has affected you, because it seems like that on every fund that we've got for COVID, whether it's a government fund or a city fund that we've put together, there really needs to be that COVID statement. And so you need to think about how it really affected you and share some of those numbers of what it did. And then also making sure that you've got bank statements. A lot of times for the EDA funding, I have to prove that you were making money back in 2019 and then get bank statements from 2020 to show how COVID really affected you. So those are the kind of things that folks can start getting together right away.
And to kind of piggyback off what Catherine just said, another big part of the lending process is understanding how you're going to use the loan proceeds. So that's a big part of our lending process. We need to know, we need an itemized breakdown of where every dollar is going that you borrow. And it's extremely important because it goes back to the impact, to the community impact. You know, are you going to be hiring people? Are you going to be looking to outsource contractors? Are you going to be creating a program that's going to help the community? You know, that gives us an idea of where the money's going. And also underwriters look at it to make sure that we're being prudent, that we're giving out loans that's going to set our businesses up to succeed. You know, unlike, you know, larger banks, with the smaller bank, we have direct communication with underwriting. So I worked for JP Morgan Chase prior to coming to TruFund. And whenever I submitted a small business loan, you know, I called the business direct center, which is an extension, and they would take it over. And I wouldn't be included in the communication until either it got an approval or a decline. So I wasn't involved in underwriting. I didn't know what they were looking at. I didn't know what they were looking for. They would just either send me a letter saying, hey, this loan is approved, or hey, this loan is declined. At smaller company, such as TruFund and LISC, you know, we work in silos, but we have direct communication with people that work in different departments. So I work with one underwriter. I can get him on the phone anytime I need him and say, hey, you know, can you give me an update? He has a direct line to me. He says, hey, I got a few questions. Can you have those answered? And it's an ongoing conversation. So, you know, that's the difference, you know, and that's where that flexibility comes in. That I just had a loan where we were actually able to offer the client a much lower interest rate than we initially quoted, because we're just so fluid in how we can underwrite, and we're all about trying to help these businesses. So I think when we first started, the interest rate was at around 7 3/4. And by the time we got her pushed through, and by the time we got everybody involved from executive team management, we did a large portion at 3%. And then we did the rest at 5.5%. So, you know, like I said, we're a smaller company. We have direct communication with people in different lines of businesses. And our mission is all the same: to get capital in the hands of businesses that need it.
All right, was there any questions for Juan or myself? Anything that you all may have on your ongoing business or you're seeing out there?
Catherine, I think Mr. Luke Morris has logged on now. If we don't have any questions, we'll go ahead and let Mr. Morris tell us about their program. And I think he's on mute.
Hey, good afternoon, everyone. And thank you, Ms. McGee. My name is Luke Morris. I'm with the Louisiana Department of Revenue. And I was going to share a little information about our program that we launched a couple of days ago. It's through some legislation that came down from the 2021 regular session. I'm going to actually share my screen so I can kind of walk you through where everything is on our website, how to apply, what's the eligibility requirements. So give me just a moment and I'll share that screen. All right, so to find information about this program that I'm going to cover, we have everything on the LDR website. So that is at our homepage, revenue.louisiana.gov. And the very first thing that you'll see when coming onto this page is this nonprofit and small business assistance program. So from there, you'll be able to, applicants are able to click on that. And then we have both an eligibility quiz that will walk individuals through the different eligibility requirements. And then if they answer all of those questions correctly, it will lead them to the actual application that can be submitted online. But before I jump into that, let me give you a little bit more information about how this grant program works. So it originated, the funds anyway, originated from the American Rescue Plan that came down several months ago. We have $10 million that are allocated to this specific program, and the grants can be up to $25,000 per applicant. So it's not a great deal of money to spread across a lot of potentially worthy causes, but it is what we're allocated, and we are going to accept applications from now on. There is no official close date for applications, and any that we receive after the original $10 million funding runs out, we will, should there be more money allocated by the legislature into this program, we will use those folks that did not qualify due to lack of funds the first time, and we'll pick up with them on the second time. So generally, a few eligibility requirements that apply regardless of who is applying. That is that they have to have been open and actively operating as of June 17th of this year. So it has to be it can't be a new business that's formed specifically for receiving a grant. They have to have already been in business as of about 2 months ago. They'll have to be in compliance with federal and state tax laws, meaning they'll have to have filed their 2019 and 2020 tax returns with the IRS and the Department of Revenue. If required, they will have to be in good standing with the Louisiana Secretary of State, meaning they'll have to have their articles on file and then their annual reports submitted timely. And then they can't exist, a couple of prohibitions, they can't exist for the purpose of advancing partisan political activity or directly lobbying state or federal officials. So if you meet those general criteria and then also agree that you would enter into a cooperative endeavor agreement with the department to make sure that the funds are expended in the way they should be, that's, I guess, step one of being eligible. The other steps deal with whether you are a nonprofit organization or a small business organization. So, and these particular requirements speak to the intent, the purpose of this program. And again, it came from the American Rescue Fund. Those are the fund dollars. So they have to have or be related to the response and relief efforts surrounding COVID-19. So that includes, for nonprofits at least, that they be a public charity, a faith-based organization, or your typical nonprofit 501c3 organization that has to provide social services to the broader community. We'll get into a little bit what those services entail later, but those grant recipients have to use those funds to provide relief as it relates to COVID. And then importantly, this is not a first come, first served program, meaning it is going to be based on priority. So while our application period started on Monday, someone that submits an application next week might be ahead of the person who had already submitted it based on how they intend to use the funds, how they relate to food, employment, or education, and how they intend to impact the broader community. So it has to be on that kind of a large scale, broad basis to serve the purpose that is being intended with the legislation. And on the other side, we also have a small business portion of the application where if you're a certain type of small business, be it a corporation, an LLC, partnership, or sole proprietorship, you can also receive up to $25,000 in grant funds for the use of workforce development activities. So, and it is limited to small businesses, meaning they have to have that 50 or fewer full-time equivalent positions. But in terms of workforce development activities, we have some examples that we have in the program guidelines that I'll switch to in just a moment, but those activities have to be intended for the purpose of addressing and providing response and relief to COVID-19. So meaning it's not just to hire a new employee to develop someone's workforce, it has to be those actual activities such as, let's take for example, maybe a manufacturer that used to produce some type of product, but due to COVID, due to the pandemic, they switched to manufacturing PPE or hand sanitizer. To switch their business model, their employment setup to be able to manufacture these new types of items that are related to COVID and to that relief, then they would qualify under that workforce development activity. So like I said, this is the website where we have all of this information. We'll look at the quiz in just a moment, but up here are the program guidelines. And I would urge that anyone who's intending to apply review these pretty closely. We have all of the details in there. They're only a short 17 pages long, but they do have all of the rules pertaining to the program, everything that I've covered this afternoon for sure. I want to show you specifically these dates here. So like I mentioned, we started accepting applications this Monday, And then last week we had our eligibility quiz that went live. From there, we are expecting to process and review applications over the next month. And then starting on September the 10th, we expect to issue out those first round of approval letters, and as well as the grant funds, and then hopefully concluding around October the 1st. And of course, that's all based on how many applications we receive. And I'll tell you right off the bat, we're up to about 2,000 plus. And I think collectively requesting somewhere over $100 million in grant funds, which is 10 times the amount that we have. But again, this is going to be priority based. So we are, at least this week, going through and delineating which are for this intended purpose and which are maybe not quite so eligible for these grant programs. And then next year, come August 1st, that'll be the due date for submitting the final report to the department, the documentation on how those grant funds were expended. So we do expect that this will be a front-end award of grant where we will issue the funds, and then the money will be used in the manner that is provided for in the application. And then on the back end, it would be reported back to LDR how those funds were issued. So in this document, we have, again, a walkthrough of everything, explaining how the funds would have to be used, whether it be a food type program or an employment program, or whatever the case may be, in which the nonprofit intends to use the funds, similar to the small business. And we have the examples in here of the different types of uses that are permissible. And then we also have an extensive amount of FAQs that explains in-depth different things about, what if this is a church applying and they do not have their articles of incorporation and things like that. These are covered at length in the application. And then switching back to our website here, we have this eligibility quiz that I mentioned. And so this is not the application itself, but this is the quiz that you can walk through that will, answering each question, they're tailored to what type of organization it is, will let a person know on the front end whether their organization may qualify. So if we assume we're a church in the local community, we would be under that public charity or faith-based organization. So you'll walk through these different steps here that match back to the eligibility requirements. And let's say you get to one of them and the answer is like for a church, they may not have any required filings with the Secretary of State. Then they would click not applicable in that section. Otherwise, it would be yes or no. Again, they may or may not be required to file returns. That is something that LDR will identify on the back end. If they were supposed to file the returns but didn't, we'll contact those applicants, but otherwise they will just either submit the returns that they've already filed, or they'll have to file delinquent returns, depending on what the case is. But in our example of churches, they would not be required to file returns. Then we also require from the statute that they be in compliance with the Internal Revenue Service, meaning they have to file their forms 990. Again, churches are not required, but let's say that if you are required and you haven't done so and you were to select no on this screen, you'll get a prompt saying that based on how you answered that question, you're not eligible for the program and to review the program guidelines again. But let's going back, say, yes, we did file, or we weren't required to file the 990s. We could click on not applicable, and then we'll continue to go through the other eligibility requirements. This one, I think, is probably without a doubt the most important one. And when we get to the application, you'll see just how this will be the point of how we determine the priority of who to award grant funds to and how to determine, from a perspective of, is this going to impact a broad community, or is it maybe just limited to one or two individuals, and how we will prioritize from there. But assuming all of the answers or the questions are answered that indicate eligibility, it'll bring you to this screen where you can apply for the grant I'm not going to walk you through those steps specifically, but you would begin by creating an account, set up a username and password, and then you'll be able to access the application. We have an online application set up, and certainly we do recommend that folks use those, but I'm going to show you in just a moment, I'm going to show you what an application looks like in paper form. Just a moment, I thought I had that pulled up. All right, so this is identical to what our online application looks like, but this one is just if you are applying by paper. So certainly standard information, we're asking about who is the applicant that's applying, be it the nonprofit or small business, some identifying information there, and then what type of nonprofit are they specifically. With every application, we have to have a responsible party be named. That'll be the person that is the primary contact for the Department of Revenue. That's who we will work with any questions, any kind of information that we may need. And then this section here, I think, is certainly the most important. So obviously, we need to know what areas of the state that a person or company intends to provide services, and then how that fits in with what they're doing. So let's say that you have a local church that is going to partner with a local health unit or a hospital to do, let's say, a vaccine drive or a COVID testing drive. And the nonprofit, the church, is going to provide food and drinks and water while the vaccinations or the COVID tests are taking place. In that situation, that nonprofit church would click on the food assistance program and then explain here in as much detail as possible. We can fit a good bit of information on these forms, but you can always attach additional documents to explain in more detail. But you'd want to explain exactly what you are doing with these funds and how, in your opinion, that is going to best assist the community in the COVID response. Another example that we've had is with employment assistance. We've seen where some nonprofits are going to partner with a local government agency to do a job fair, where if the local agency has jobs available or local businesses in the area that are in need of jobs, they can partner with this nonprofit, do this employment assistance program, and the funds could be used to provide for all of the costs ancillary to the job fair cost as a whole. And then on the second page or later in the online application, just ask for a little bit more details of when the services are going to be provided, where at, your total budget for this proposed program, which can be in excess of $25,000, but also how much of the up to $25,000 are you requesting for grants. And then a few other questions. We ask if the applicant received any other type of benefits, relief benefits, be it PPPs or Main Street Recovery grants or whatever the case may be. And then a timeline for the program. And then all of these items here should look familiar. These are the different eligibility requirements, which we'll verify on the back end, but of course we require the applicants to certify to those during the process as well. So that'll be pretty much as simple as it is, a 2-page application or just a few screens to click through on the application, on the online application itself. Let me switch back to this. But again, this is where all of the information is housed. I definitely encourage you to look through those program guidelines. That's where we have all of the examples of permissible use of funds, how you would go about applying for the grant, which I covered, but everything is in there in detail. So going back to, open this page back up, going back to those dates. Like I said, so we have already started receiving applications. We're into the thousands now, but there is no official shutoff date when we will start accepting or end accepting applications. So anyone that's interested, be it a small business or a nonprofit, we definitely invite you to apply. We'll start reviewing these, I think, on a daily rolling basis, and with those first set of funds set to go out the door September the 10th or somewhere around that time. So with that, I think that is pretty much covers the program as a whole, the eligibility requirements, how to apply for those funds, and things of that nature. I think there might be some questions. No questions in the chat box, but I'll be happy to answer any questions or dive into anything in more detail if anyone has any questions.
Any questions at this time? Well, I guess not. Thank you all for coming in on our business information session today. Thank all of my speakers who provided very informative presentations today. I will share with you guys, everyone that attended today's session, I will share with you presentations and that information from Mr. Luke Morris. I'll share that at least by tomorrow. Just a reminder about my session next Tuesday, August the 24th. In a minute, I'll see if I could share my screen and that information, but I'm pretty sure you guys receive my emails daily reminding you of these sessions. So once again, if there's no questions, we'll go ahead and conclude this session for today. Oh wait, I just got one. Are the LDR grants eligible for forgiveness?
Yeah, and I'll be happy to answer that. So I think, well, let me back up a little bit. I think the question probably is better said, are they taxable? So these grants, these funds are actually taxable income at the federal level. At the state level, they are exempt from taxation. So anyone who receives the grants, they would have to pay tax at the federal level, but not at the state level. So, but in terms of forgiveness, we do have to account in accordance with the American Rescue Plan and the statutory guidelines. We have to account for how those dollars are spent. So the grants do not have to be paid back. That we don't expect them to be paid back. Once they are issued to the applicant, to the recipient, then they use those grants to provide for their program. But every dollar has to go toward that program. If there's unused dollars available at the end, they have to be returned to LDR so that we can grant them to the next person in line. So that while you're not eligible for forgiveness, they have to be used toward that public purpose that sets forth in the application. And hope that answers that. I'm gonna drop my email address in the chat box just in case anyone has any questions after the fact. Feel free to shoot me an email.
Okay, I was just gonna ask, do you have any requirements where they have to submit documentation to you for a certain length of time once the funds are given to them?
Yes, April 1, 2022 is that hard cutoff that once we expect these grant funds, like I said, to hopefully be completely out the door by October. So the nonprofit, the small business would have roughly between October to March of 2022 to spend those grant funds based on their approved purpose in the application. And then April 1 is when they would have to report back to us with the whatever documentation that's appropriate, saying how they spent the funds. If it was like a vaccine drive, like I mentioned, we would probably want to see like a sign-in sheet of who got vaccinated, or at least the head count. Or if it was a job search fair, we would want to know who came to the job fair, who offered positions and things like that, so that we are able to properly verify that the funds were used in how they should be. And then should the Department of Revenue be audited, we can then provide that information to the federal government if they were to review how these funds were spent.
Thank you so much. Again, we have information for Mr. Juan, Mr. Luke, and Ms. Catherine in our chat section. But I would also share that the presentations and their information, like I said, by tomorrow to all that attended today's session. So if there's no more questions at this time, we'll go ahead and end this session, and I hope to see you guys next week. Thank you.